How easy is it, Natasha, to get a handle on the impact that Omicron is going to have? OPEC sounds pretty confident that it's going to be minimal. What is your take?
Yes, so for now, I would have to agree with them. We do not see any impact on the demand from the Omicron variant. Clearly we're too early into this process, but so far, if you look at the global mobility is actually flat. So European mobility has been declining because of the lockdowns in the region, but at the same time, mobility is surging in countries like Brazil, India, APEC countries outside of China. Chinese mobility is actually back to the levels in 2019. If we look at the number of the daily flights, that actually has been rising steadily. So across every single region, we see that the people continue flying, and there is clearly no fear baked into that. So by all means, I would have to agree with them that the impact from the variant will be probably mild and short-lived. I think as long as the world is adjusting to living with COVID that is endemic rather than the pandemic, each wave will result in a smaller and smaller impact on demand. So at least that's what we're seeing for now, for sure.
So Natasha, good to see you, by the way. So we're looking at Brent 75, WTI at 71. Are we at the right price?
I think there are 2 points to be made. It is oversold. Like this big, $13 drop in the price was baking in a significantly bigger hit to demand. Like this, $13 was pretty much equivalent to about 2 MBDs decline in demand over the next 3 months, or about 800 KBD of demand decline over the next 6 months. Yes, because the whole curve down shifted lower. So right now, this is not materializing. I think, looking at all the data, it seems that this is very, very, very type of a negative outlook on the demand, which is not realistic at this point. Number two, liquidity is very low. So we definitely we saw a very limited amount of the participation. We're towards the end of the year. I think there's a lot to be said that a lot of people made a lot of money on the European gas. So liquidity is very low. You can see this in the open interest. So I think, that's definitely one of the reasons why we're trading where we're trading. But overall, by all means, it seems oversold.
Natasha, how big a swing factor is that European gas story going to be over the next couple of months? Gas prices are up really sharply today here in Europe. There's serious fear, and it's growing, that you come to January, you come to February in particular, that Europe's going to run out of gas. If that turns out to be the case, and I'm not saying it's the base case, it's not the middle of the distribution curve, but let's say that tale comes true, how does the market react?
So there's significant amount of support from the gas. You're absolutely correct on that, and that's through the link of gas to oil switching. Yes, if burning gas makes no sense, you're turning to oil and you start burning oil. So this is already baked into OPEC numbers for sure. So I think the market consensus is probably about 400 to 500 KBD of additional demand coming from the gas to oil switching. Europe is definitely the market seems tighter and tighter. Yes, was every day we see more and more news pointing towards that. In general, our view was that the only hope for Europe was a mild winter and the arrival of Nord Stream 2 in December. Right now, all the weather forecasts we're seeing is, and again, keep in mind, we cannot see beyond 11, 15 days going forward. Yes, on the weather forecast, but at least what we see right now, the weather in Germany is set to be cold, dry, and windless towards the end of the year and into January. So which clearly this is already providing support to the prices. But with geopolitical tensions rising in Ukraine, the approval of Nord Stream 2 before the second quarter seems unlikely. I think the consensus is pegging it about September, October, somewhere there. And, clearly today, guys, you're reporting the new threats to German and Polish gas supply from Belarus. So this means that the risk of the gas flows to Europe are becoming more and more higher. Yes. Mm-hmm. So putting everything together, everything points to a very, very tight balances in Europe over the winter. So here, that's definitely support to the oil prices as well.
I'd love to just turn the attention and kind of end on some of the metals. Aluminum's up, iron ore, nice move today. You also have copper, a little bit light, but had been trading pretty well. And I'm wondering, when you take a look at Chinese demand and what potential policy support we're going to need to see as they kind of work their way out of COVID, as well as the Evergrande debacle, what does that mean for metal right now in 2022?
So everything what we see in China or from China right now is that they're stepping in to provide support to the economy. Yes, that's explicit. You see this from the official messaging. The RR cut, all of that should provide support in 2022. So from that perspective, we actually think that the worst is behind us, and we should be seeing some improvement in the Chinese metals demand. Keep in mind, if you look at this year's first quarter was extremely strong, but second quarter, third quarter, and the fourth quarter, we actually had negative growth in the Chinese metals year over year. Yeah, so it was definitely a very negative picture that we were seeing out of China. So we do believe that this is behind us, and going into 2022, we should see improvement in demand. We believe that the first half of the year looks actually very strong. Aluminum is our favorite. Just 40% of producing aluminum, it's energy. Yeah, so as long as we remain bullish on energy, that should provide support to the metal.